Good evening. You're watching What You Miss on Bloomberg Quint Live, India's first digital live streaming business news service. I am Agam Akil, and these are the top headlines we're tracking at this hour. Markets take a breather owing to a lack of cues. The Nifty closes below the mark of 10,350. In Interglobe Aviation beats estimates in the second quarter. Bottom line jumps nearly 3 times. But no such luck for JSW Steel. The country's largest steel maker misses the mark in the second quarter. And the country's largest telecom operator, Bharti Airtel, is also expected to report a muted set of earnings as far as the second quarter is concerned. The Tata Steel names head TV Narendran to lead global operations as CEO. But that said, let's go across to JSW Steel and see what they have to say when it comes to its management and its earnings.
Actually, the estimated demand for the calendar year 2017 is revised by WSA to 7%. In this entire equation, if you look at the China, the nominal increase in demand is estimated to be over 12%. So they have consumed a lot of steel. So in spite of producing more production of 66 million tons, we are seeing that is getting absorbed, which is a very positive for the global steel industry is concerned. Then there are certain export-dependent economies, as we talk always, Japan, Korea, Russia, and China. If you look at the exports from these countries, other than China, all other countries are almost at the same level as that of the last 9 months. But one important factor, if you see the ASEAN region, the imports into those countries by these three, Japanese, Korea, and China together, has been reduced. So their exports to ASEAN region has come down by 10 million tons. So when the exports have fallen, which region exports have fallen, we have been watching. So ASEAN region has received less imports from China, Japan, and Korea. Then the surplus, they are looking for the markets. So where this extra steel has come, that is India. If you look at Q2, which is concerning as far as steel industry is concerned, the total imports into India on an annualized basis have reached 12 million tons. So this is pre-imposition of MIP, minimum import price. So imports have gone up quite substantially into India in the Q2, either sequentially or compared to the last year. It is 58-59% growth which we are seeing in the imports. Again, if you go into details of imports, from which country these imports have come, China is concerned on quarter-on-quarter basis, 102% growth. Last year, 4,09,000 tons of imports into India, whereas in this year they exported 8,27,000 tons. So more and more imports are coming into India. So what is the impact of imports coming into India when ASEAN region is not able to absorb the surplus that is getting generated in these export-dependent economies? We are watching what is happening in the international steel prices. When the global economic outlook is positive, when the steel industry is doing well globally, steel prices went up globally. Whereas India, Q2, if you observe, either competition or JSW, you will find steel prices almost flat relative to the Q1. So more and more imports are coming at lower prices than what is prevailing internationally. So that has an impact on the overall NSR, net sales realization, as far as the Indian steel companies are concerned. One side costs have gone up, but at the same time, our realizations have not gone up to the extent that is prevailing in the international market. As far as India is concerned, we have produced again 4.5% more steel in the quarter. Our consumption has grown by 4.3% in the last year. Only negative factor which we are seeing is the more and more imports, taking away the incremental demand filled up by imports than the domestic production. That is the outcome, and the NSR is not as attractive as it should be when compared to the international steel prices as regards to net sales realizations are concerned. In this context, if you look at JSW Steel performance, in my view, is commendable. So we have produced 3.94 million tons production, and the sales were 3.92 million tons, which is a 2% growth. But if I look at consolidated sales of JSW Steel is the highest ever. We're at 3.96 million tons, which is a 4% growth. So there is a huge amount of effort which has been made in reducing the inventory. We have reduced our inventories by 211,000 tons in the last quarter. So even though production is flat, sales side we have done extremely well by reducing the inventory. All these resulted into the EBITDA of 2,927 crores on a standalone basis, which is a 9% growth. The EBITDA margin is 19.57%. The profit after tax for standalone company is 845 crores, which is a 26% growth. Our subsidiaries, Plate and Pipe Mill in the US, it has clocked an EBITDA of $1 million in this quarter, compared to $220,000 in the corresponding quarter of last year.
Well, that was the management of JSW Steel in taking us through what has been a very lackluster quarter. But what has also been lackluster is today's day of trade when it comes to benchmark indices, with the Nifty falling below the mark of 10,350. There have, however, been perhaps some positives, because we have seen the larger and our broader market outperform the Nifty. To take us through this is Neeraj Shah, who is going to talk to us about the movers and shakers today. Neeraj, what do we have for us?
Well, it was a muted day of trade for sure, as the benchmark indices performance tells you. So about 0.25% down for the Nifty, Sensex down about 53 points, and the Nifty Bank and the Nifty PSU Bank Index as well, which will come up on your screen, pretty much showing that muted day of trade. The Nifty Bank, PSU Bank Index, in fact, correcting 2%, and that was really the highlight. Well, actually, the mid-caps didn't do all that bad. Let me correct myself. Mid-caps did reasonably okay. The small-cap space, and which is the market breadth, was marginally in the green. Now, within the indices, what did well? I think the one stock that stood out was Axis Bank. Newspaper reports suggesting that PEs may buy stake. Both Times of India, Economic Times reported that. That stock up 8%. Conversely, SBI fell. That was amongst the heavyweights, in addition to maybe Infosys and a few others, which dragged the index down. But the broader end of the spectrum punctuated by gains to a bunch of names. So firstly, results impact coming in for Balaji, for Bharat Electronics. Good moves. Balaji, I think, hitting fresh highs in the session. Speaking of fresh highs, I think some stocks will come up on your screen. HEG, Graphite India, up 7.5%. HEG, Graphite India also clocked in gains. Both stocks at new highs. Sanghi Industries, Birla Corp amongst cement stocks, which did really well. And then watch out for this one. Interglobe Aviation ended the day 2% higher. The numbers have come out post-market hours. It's a strong set of numbers. You may well see a bit of a reaction coming in from this stock in tomorrow's session. So all in all, broader markets doing well. Large caps, a muted day of trade. Back to you.
Well, there you have it, guys. Broader markets doing very well, including some of those names that Neeraj just spoke of, and a lot of them on the back of earnings, which is also the reason why we've seen broader markets do much better than the benchmark indices. And with that, let's also address some of these earnings, and I do want to address Dabur there, because while we were expecting a lackluster quarter, and there has been a miss, at least in terms of the top line and the bottom line as far as Dabur is concerned. But what really stands out is that the volumes for this particular quarter stand around 7%. That's a positive, and that's very much in line with what the management has guided for too. So, when you consider the kind of volumes that is anywhere between 5 to 10%, that was going to be taken as a positive. That's also the reason why we've seen good gains in Dabur in today's day of trade. And we did see a surge. This was especially after its earnings were released. Now, when it comes to the international business, it grew around 3.9% in constant currency terms. This is considered as a little bit of weakness, but a lot of this was also in the price, and this is because of Egypt, Turkey, which saw substantial devaluation in their currency, and that's also the reason why we did see some amount of impact coming in as far as your international business operations go. When it comes to gross margins, there was a dip of as much as 110 basis points, but the point is that on an overall basis, they also saw a decline in raw materials costs. Now, we spoke to the management about this, and they were of the opinion that we may see a little bit of an uptick. But let's also listen in as to what they have to say about GST jitters. We spoke to Lalit Malik, and he said that the operations from Dabur are now largely behind when it comes to the implementation of GST, and from now they can expect some normalcy. Listen in.
Most of the channels like modern trade, institutions, in general trade, distributors and all are completely back in the business. There has been some impact that we still see is on account of wholesalers and small sub-stockists, which I think over a period of time will get neutralized. I think we do expect our volume growth to be mid to high single digit, so therefore we do maintain our earlier stand of between 5 to 10%, and we would certainly make all our efforts to ensure that it is to reaching within that level and maybe at the higher band of single digit. So that's what we would be expecting in H2 and quarter 3 and quarter 4.
Right, so from FMCG we move on to aviation. Interglobe Aviation September quarter numbers have come in above estimates, with profit jumping nearly 3 times. Somit Sarkar is standing by with details. Somit, what's worked for Interglobe Aviation this time around?
Well, it was the passenger growth, stronger rupee and better load factor that worked for Indigo in this quarter. However, it was a good set of numbers that Indigo came out with, as it was a beat on all fronts. Revenue rose 28% compared to last year to 5,291 crore on the back of passenger growth and higher average fee and better load factor. Now, passenger growth during the quarter was around 13 to 14%, while the load factor averaged around 84% versus 82% in the corresponding quarter last year. Now, passenger growth was the slowest, but it was a growth of around 13% in this quarter. Now, EBITDA was also up. EBITDA is earnings before interest, tax, depreciation and amortization and rental cost was also up 61%, and EBITDA margins rose by around 620 basis points to 29.4%. A stronger rupee could have boosted the EBITDA margins, as most of the expenses of aviation companies dollar denominated. Rupee was stronger by 4% in the second quarter of financial year 2018. Now, also profitability was boosted because of the credits received from Pratt & Whitney and Airbus for the delivery delays and groundings that occurred in the second quarter. Now, fuel cost as a percentage of revenue, if you see, was only 31% versus 37% in the corresponding quarter last year. Now, this could be because the average fuel cost in this quarter was only up by 2.5% compared to the corresponding quarter last year. Other than fuel cost, all other costs were also managed well, as the cost per available seat kilometer remained flat at 3 rupees, and bottom line, as you said, was jumped around 4 times to 552 crore. And yields of Indigo. Now, yields usually measure the earnings of an airline company, which includes transporting of passengers and luggage, and the yields on the other hand rose around 9% to 3.57 rupees per customer.
Well, thanks for that, Somit. And Interglobe Aviation wasn't the only quarter which had a steady quarter. Dr. Reddy's Labs as well posted a steady growth in the second quarter with earnings above street estimates, but concerns remain in the US business. Darshan Mehta joins us with a complete breakdown of the numbers. Darshan, what's worked out for Dr. Reddy's and what are the pain points here?
If you're looking at the numbers, operationally it was a strong number, but I have to say that, basically it was cost controls and lower R&D cost which basically aided the numbers on the operation front, and that actually translated into the profits coming out. If you're looking at the top line growth, yes, not the most impressive. It grew at just 1%. So 60 crores is the top line that comes in. We were anticipating close to 3,700 crores. So it was a slightly weak top line, but the cost controls came in there. Now, the global generic revenues were down 1%. PSAI was down 10%. What did well was the proprietary products. Now, North America revenues were down 11%. This is much higher than what we had anticipated. The management also indicating that there are pressure points due to competition that has come in, and but they say that they expect the new launches to now come in and aid revenues for the company. India business also, India was up almost 2%. If you adjust it, it was down. It was up almost 10%, much lower than what Lupin did, and that is why the counter did not react. So operationally strong numbers from Dr. Reddy, but basically it has all come in because of cost controls and lower R&D, and that's what we need to find out from the management. What is their guidance and what they expect to do, or is this a one-off, or will the R&D costs still remain at lower levels going ahead?
Thanks for that, Darshan. So it is operational costs which have come into rescue as far as Dr. Reddy is concerned. But moving on, Tata Steel's India head, TV Narendran, has been appointed the Global Chief Executive Officer and Managing Director. Narendran, who helmed the Indian and Southeast operations since November 2013, will oversee Tata Steel at the time when it's returning to profitability and implementing the agreement with ThyssenKrupp to combine European steel businesses. And Tata Steel also reappointed Kaushik Chatterjee as its Executive Director and Chief Financial Officer for 5 years beginning November 9. And capital alone is not the reason for investors to stay away from public sector banks, says Ramdev Agarwal, one of the biggest market voices in India, speaking to Bloomberg Quint in our ongoing series on how to invest with Ramdev. The chairman of Motilal Oswal Asset Management Company says that a lot also has to do with lenders not following proper underwriting practices. Listening.
The parameter which is not having capital, that is sorted out. That will be sorted out if that's what they do. But I don't think it is only about the capital. It's also about the management. It's about the HR practices. It's about the competition. See, 10 years back, private sector was very small. Today, look at resources of HDFC, ICICI, Axis, and all the banks you have given permission to. So you have to compete against them. So you cannot have, in fact, you should have a better policy. Now, all the public sector banks, they have the fantastic brand equity and faith of the people, customers.
Yes.
Customers, they identify with them. They have grown with them. Businesses have taken their money, developmental money, and they have grown with them. So they are loyal to them. It's not only about services. It's about loyalty. I would always go to the bank which has given me the first crore or something like that. Okay, so they have a lot of loyalty and a lot of goodwill behind. The issue is that to run the, you have to have underwriting. There are a lot of crooks in the system also. They will go and again take the money. How do you avoid bad loans?
Got it.
The banking goes down. I learned it in 90s, sometime in 90s, way back, 15 years back, in one of the Q&A sessions in Berkshire Hathaway. And the manager said, the only way banks go down, only way, there is no second way. You can keep spending your way. You cannot go down in banks. The only way banks go down is because of bad underwriting. If they set in one single parameter, if government can find a way, or some commission or committee, PGNI committee or somebody can find a way, and they install that there is no bad underwriting in banks, whether you are PSU bank or private sector bank, if you do bad underwriting, you will go down. If you do good underwriting, you will just go through the sky.
Interesting.
You see, the problems are all bad underwriting.
Do remember, you can catch that entire conversation today at 10. But we're going to Bharti Airtel now. We've just had the numbers there. With profits standing at around 343 crores, which is just a tad below street expectations. But what will be more important is the underlying, figures. Now, as far as revenues are concerned, standing at around 21,780 crores. Again, largely in line with the expectations that the Bloomberg consensus had at around 21,750 crores. In terms of expectations and some key factors that we were watching out for was, of course, while Q2 is considered as seasonally weak quarter, we were keeping an eye on tax rates, especially after the implementation of GST. We have seen continued pressure when it comes to Reliance Jio, and a lot of that will have to do with the kind of numbers that we are looking at. We've already had numbers from Reliance Jio where they have reported an operational profit, so to speak, and that perhaps may not necessarily be such a good thing for the incumbent players. In terms of EBITDA and net profit, we are expecting it to decline for the fifth consecutive quarter, and margins are expected to be the lowest in the last 8 quarters. But we're waiting for more details as far as margins are concerned. For now, largely in line with street expectations, at least in terms of the bottom line and the top line. We're still waiting for the operational side of things for Bharti Airtel. Among the other few things that we are keeping an eye on was, of course, capital expenditure in the second half of the financial year. This will also, to a certain extent, set out as to what Bharti Airtel will be doing as they move into the final half of this financial year, and of course the impact on the interconnect usage charges that, of course, along with Idea Cellular, have seen a little bit of an issue with respect to that. Of course, We'll be watching out for the commentary on further stake sale in Bharti Infratel and also commentary on newly introduced bundled phone plans. Don't forget, there will also be a lot of focus on timeline on completion of recent acquisitions. I don't know if we have Sumit. Do we have Sumit? Oh, okay. So, let's go across to Avinash Gorasakar. Hi, Avinash. Thanks for joining us. Well, on the base of it, it looks like a largely inline set of numbers. What have you made of Bharti Airtel's second quarter?
I think my sense is the African operations reportedly did well, and I think the focus in the coming quarters would be obviously be on the ARPU and what sort of volume growth the company plans to achieve. I think in terms of the GST impact, I think it was widely expected that possibly the profitability would possibly be would come under pressure. But I think looking at the kind of new products and new pricing kind of strategies announced by the company, I think clearly what kind of management commentary comes on future growth numbers, that would be something more interesting and more critical to watch from the market standpoint of view.
So Avinash, from the commentary and from the numbers, what would you look for which could give you an idea of the outlook for the second half of the financial year?
I would believe that I think in terms of the pricing in the market, plus more importantly in terms of the market reach, in terms of what kind of competitive products the company would be introducing, because I think clearly we've seen that Bharti has been the only company which has actually stood quite confidently vis-a-vis Jio, because if you look at the other players like Idea, Reliance Communications, I think they have lost market shares, and I think they have obviously realized that ARPUs have actually dwindled down. It's only off late that Reliance Jio has mentioned that they were looking at a 15% increase in average tariff. So that possibly changed the sentiment for most of the telecom players. But overall pricing gains, whether the company is able to muster in any pricing gains in the coming quarters with the kind of consolidation expected in the sector, that would be very critical to watch.
Avinash, we do have a little more in terms of internals for this particular quarter. So, when it comes to margins, they have fallen off from around 36% levels to around as much as 30%. And the other crucial factor, of course, is the ARPU, as you were just, alluding to. That's come off from 146 to 145. Is there any takeaway from these numbers, or were they largely in line with expectations, something that we were expecting, and we should be keeping an eye on numbers going ahead?
I think numbers have been more or less in line with expectation, both on the EBITDA margin front as well as the ARPUs. I think clearly, if the company is able to manage ARPUs at these levels, I think that itself will be a great kind of positive factor for Bharti, because clearly in terms of the competitive intensity, we believe that at least for the next couple of quarters, the markets are going to see extremely strong, competitive, kind of pricing from Jio. So all said and done, if, Bharti is able to maintain these kind of ARPUs, it's definitely a good positive, because clearly in terms of the balance sheets, size, the strength and the geographical reach of Bharti, I think clearly, Bharti seems to be the most well-positioned competitor for Jio. But I think, yes, margin pressure would continue at least for the next 1 or 2 quarters.
Okay, we are waiting by, we are waiting by on Sumit to join us as well. But before I go across to Sumit, there's just one question on the African operations. Can you elaborate a little more? You were talking about them. Can you tell us a little more about what we should keep an eye on as far as that's concerned?
I think Africa possibly operations are important from the point that what could be the break even and what could be the kind of EBITDA contribution from that business. Clearly, in terms of the last couple of quarters, there has been some marked improvement. But I think the market would obviously like to know whether that piece is also going to contribute to the overall EBITDA. So I think some more news flow on that would be very important.
Okay, I think we have Sumit joining us with more details. Sumit, what else do you have for us? We've already addressed the headline numbers, which are largely in line. Anything else that you're picking up?
The numbers were largely in line. The ARPU came in at about 145. The street was going with the number of 146. Now, if you see, there was a significant improvement in the African business. The revenue came in at 55,203 crore, while margins for the African business came in at 32.3% versus 23.1% in the corresponding quarter last year. Now, you have to keep in mind that this is a seasonally weak quarter, plus there was an impact of GST that had come in this quarter. Also, we cannot forget Reliance Jio that has continued continued with the competitive pricing in this quarter. Margins were EBITDA, on the other hand, was above estimates. It came in 5% above estimates and also 7% higher compared to the last quarter. And the number came in at around 7,922. And yeah, that's what we are currently seeing with these numbers. We'll have to still wait for the management commentary on how lower interconnect usage charges will be impacting the company in the coming quarters and what will be their capital expenditure for the second half of financial year 2018. Also, if you see EBITDA in this quarter has grown up by 7%, thereby reversing the trend of four consecutive declining quarters, and margins have also expanded in this quarter, and it is around it's still lowest, but it has broken the trend of falling margins in this quarter.
Sumit, we also have Avinash with us. Is there anything that you'd like to ask him as far as these earnings go?
Yeah. What is your outlook on the African business of Airtel? Do you see growth coming in, more growth coming in from that segment, that side?
Yeah, hopefully, Sumit. As I mentioned earlier, I think this is one market where a lot of expectation is being built in, and I think some commentary on the management on the African market operations would possibly give a better insight as to how the company has done and how it plans to actually further penetrate this market. And I think in terms of ARPUs, I think how this market is definitely going to play out for Bharti, that would be very critical to watch going ahead.
Do you think the average revenue per users have bottomed out in this quarter, or there will be further degrowth through this?
Yeah, I think my guess is ARPUs could possibly come under further pressure. As you rightly mentioned, the interconnect charges have actually not impacted the ARPUs as of now. I think that impact could possibly come in the third quarter. So probably, some more damage on the ARPUs could possibly come in. I mean, some more insight from the management side on this part would be really critical to watch out.
What are your estimates? How will the cut in interconnect usage charges will impact the EBITDA of the company?
Yeah, I think clearly our sense is that, with the kind of competitive intensity which Jio has already presented, I think clearly one could expect a further kind of downside to the EBITDA if the interconnect charges are implemented on an annual basis. One could expect, at least a 10 to 12% kind of downside for the EBITDA from the current level. So probably, I think markets would possibly like to factor in that, especially on a full year basis rather than on a quarterly basis. So that is something which, continues to be a little negative for Bharti as of now.
And going forward, who do you think will be the benchmark for average revenue per user? Will it be Reliance Jio, Bharti Airtel, or the combined entity of Vodafone and Idea Cellular?
Yeah, I think my sense is with the merger of Vodafone and Idea now getting clear, that would possibly present a realistic estimate for ARPU. Because, in terms of the geographical size of the market, they would be a very large player, and probably, that would decide the benchmark ARPU. But I think in all sense, a price of around 130 to 140 would be a kind of a realistic ARPU to expect in the near term.
That will be all. Thank you. Back to you, Agam.
Well, thanks for that, Sumit, and thank you, Avinash, for joining us and taking through those numbers. But with that, it's a wrap on this edition of What You Miss. For more news and updates, stay tuned in a Bloomberg Quint.